everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, just keep in mind that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense for your risk tolerance. And we'll go over some ideas in that regard as well as we go through some potential simulated trades. Also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our WebTrader platform, which allows you to trade on both MT4 and MT5 accounts, but with the advanced functionalities that you find in both our WebTrader and our app. And so if we log in here in the upper right-hand corner, we'll find ourselves in the WebTrader platform. Now, before we get into the technical analysis stuff, which is the main focus of this webinar, we should talk a little bit about the most recent fundamental news, just to get an idea of which way the wind might be blowing, so to speak, with different instruments. And so some economic data came in today out of the US showing inflation is still not under control. The PMI data specifically came in higher than expected, a number of different readings of the PMI. And so that's created some fear in the US markets in particular. And what that means is if inflation is still too high, the US just is going to have trouble justifying lowering interest rates down. We already saw recent data showing that the housing sector with new home sales, etc., is really being hurt, and potentially because of these high interest rates, making it harder for the average person to afford a home loan. And that has a ripple effect, high interest rates, not just the housing sector, but also other areas, automotive, businesses, etc. And so with that PMI data coming in higher than expected, understandably that created some fear and largely in the US markets. That does carry over a bit to the other markets as well. And then on top of that, we've got fears about tariffs going on Canada, Mexico, China, and the retaliation tariffs coming back on the US. All kinds of different products would be affected in industries. Now, there was a bit of a bounce today after the scare sell-off yesterday with the tariffs and counter tariffs going in place. There was a bounce back up in the equities on the major indices today because there was some talk near the end of the day yesterday that there might be some negotiation going on already, that there could be a resolution to the trade war just as it's just barely getting started. So that kind of calmed some nerves, but there is no resolution yet. And so we'll see. There's still jitters about that. And then the PMI data just kind of pushed the fear meter back up on top of the tariff jitters. So that's kind of where we stand largely on the fundamental news. And then we can take a look at the technicals now to see, well, how are things playing out? And what we can do is compare some different instruments. If we go to a multi-screen view, and maybe I want to bring up the major indices because they seem to be affected quite a bit by these tariff jitters and more of a global effect with that, and maybe more regionally with the US indices. So if I want to go on this one, and let's look for maybe the US Tech 100. Okay, and then we'll bring up the FTSE, the UK 100, and over here maybe we'll do the DAX. It's a popular index. Not that we can't look at the Australian 200. Here's the German 40. Used to be the German 30, DAX 30. Now it's the DAX 40. Okay, so what we can do is make sure we're on the same candles with each of these charts. Maybe expand it a little bit. And with 1 hour candles, we can get a good look of what's happening today on these different indices. And what we might see is a larger negative effect. Okay, 1 hour candles, 1 hour candles, 1 hour candles. Okay, so what we see is with the DAX, we're up significantly on the day. With the US Tech 100, we're down, and with the UK, we're down. Okay, so do we see a trend here that we might want to follow? If I see in general 2 out of 3 indices are down, okay, we've got resistance up here on the German 40. On the US Tech 100, it's dropped off the resistance and pushed down. And on the FTSE, we've dropped down off of the resistance. Okay, so we see downtrend, downtrend, and not a downtrend. Okay, so if the markets tend to act globally, then you could look at a couple different things. 2 out of 3 markets are dropping. I think the US may be the strongest, but the UK also. And the German 30 has reached a resistance level. So it doesn't take much to put your stop loss above this resistance and look for potential profit down towards these low points here. Maybe the beginning of this gap could be a spot you'd be interested. And so if that was the case, then maybe we're interested in the German 40 in particular. And so if we were going to short the German 40, okay, because 2 out of 3 indices are down strongly and the German 40s hit a resistance level and looks like maybe it's starting to drop, okay? So technically speaking, it's an opportunistic entry point and it's in the direction of the greater trend. I'm just zeroing in on some smaller candles to get a better look. And so you might get your stop loss up here, okay? And you take profit down this direction, okay? And so take profit on a sell could be down here at 23,040, 23,045, something like that. Okay, stop loss above the resistance. If it doesn't break today's high, 23,240, for example. So we're going in the direction of a lot of fear. Whoops, we need to get an extra number in here. Should be 23,047 or 45. We're missing a 0. There we are. So selling to make over 2,200, 2,300. Risk about 1,800. So nice ratio. It'd have to break above today's high for us to lose. It's a downtrend on global markets, it feels, with a lot of fear out there about trade war and bad economic data out of the US if you wanted to not see high inflation, with the inflationary data coming in high. So if the DAX gives way to the global momentum, what we're looking at then is an opportunistic entry point from a technical perspective. And so now I just need to adjust my trade size to risk the amount that I'm comfortable risking. So if I want to risk, I don't know, 500 per trade or whatever that is for you, 1% of your account, 0.5%, I see I can do a little bit more than 0.5, 0.6 puts me around 1% of my balance to make over 1%, 720, 740, risking less than that around 500. So that puts my trade in action. I'm in sell position, looking to take profit just before this support level down here. Don't have to break the support to take profit. In order to lose, it would have to break the momentum of the day for all of these indices and be the outlier of these 3 major indices. It would have to break to a high of the day when everything else is hitting the lows of the day, pretty much, that we're looking at here on the screen. So we've got momentum down, it seems, in the global equities, the DAX being the outlier, and so we're trying to go in the direction of the global momentum. Doesn't mean that it will follow that way, but it's a nice technical entry point for technical traders. Resistance level is close. Take profit a little better distance, okay, without having to break the support. So from a technical perspective, it looks like a good trade, even if you weren't thinking about fundamentals. Then when we add in the fundamentals and the confirmation of downtrends on 2 other major indices, then maybe it makes more sense to go ahead and make that technical trade that already looks good from a technical perspective, okay? And we can always go to a one-screen view if we want to see the DAX a little bit better here, and we can see what we did. So we've got potential pull back down after all the dropping yesterday. We had a rebound, and then overnight it gapped up to the morning, and all this dropping was fear about trade war. Guess what? There's still a potential for trade war. So all of the fear that brought the market down yesterday, the rebound back up, reaching resistance level, and 2 other major indices dropping, put you in the direction of the technical move here to go towards the support level down here, trusting the resistance level with a nice entry point from a technical perspective if you wanted to short this, because the resistance level is very close, the support level is further away. And we don't even have to break below today's open price in order to hit our take profit. Okay, so opportunistic setup for sure from a technical perspective. Now, what else can we look at? I'll tell you that the crude oil inventories, again, out of the US, came in higher than expected. What does that mean? It means maybe there's less demand for crude oil. It means maybe the economy is slowing. There's no one-to-one for sure on that, right? But it's starting to become a trend that crude oil inventories now a couple times in a row out of the US have been higher than expected. So as supply goes up, usually that means bearish pressure on price. Okay, not always, but many times we can see that. Now, we do have a bit of a weakening of the US dollar today with the unexpected high inflationary data out of the US. And, what we want to do then is take a look if there's bearish pressure on the US dollar, then we could be looking at Euro USD to verify that. And we see the Euro climbing rapidly against the US dollar. So that's not hard to identify. Usually when the US dollar is weakening, we could see an increase in commodity prices, like gold, like crude oil, etc. So we do see it, the dollar index is showing a weakening US dollar. Specific currency pairings like Euro USD show a weakening US dollar. If we do GBP USD, again, climbing rapidly against the US dollar. So, one way to look at high inflation is to say your currency isn't worth much, right? High inflation, the high PMI data, and some other numbers that have been bad out of the US are really causing some weakening of the US dollar. And so we see that in the individual pairings and in the dollar index. Now, if we go to crude oil then, we can see the opposite. Why is crude oil dropping while the US dollar is weakening? I have crude oil paired against the US dollar here. Why is it not going up? And the answer would be crude oil inventories show economic slowdown potentially, and maybe less demand for crude oil, less demand for energy in general. And so you see the result, crude oil dropping. But maybe this is an opportunistic spot if the US dollar eventually is getting weaker, maybe crude oil eventually can bounce back up. So you could start to look for technical entry points. If I go to 4-hour candles, I don't see a support level. Okay, crude oil is plunging because U.S. economy seems to be slowing down a bit. The jobs data was bad today too. Okay, lower, much lower than expected for the advanced data payroll information that came out of the U.S. We'll see it on Friday. The non-farm payroll announcement comes in. We'll see if that goes in the same direction as the advanced data showed today, but it shows a big slowdown, a cooling of the job market in the U.S. with that data today as well. So high inflation and bad jobs, that's a bad combination. And so no wonder we see maybe crude oil pushing down a bit. I don't see a nice support level until I go to the one-day candles, and then we find it over here. Okay, you see the one-day candles, and we can then say, okay, here are the one-day candles. Last time it hit this price way back here in September, the price then jumped back up. What happened just now? It hit that price exactly and started to bounce back up. So on the one-day candles, we see why there's a bounce right now in the price of crude oil on this downtrend. It doesn't mean it won't break that support level, but that's the support level it just bounced off of. So it wouldn't take much to get your stop loss below 65.26 to see if that one-day candle support holds. And maybe it does what it did here. Okay, we understand why crude oil is dropping. Crude oil inventory is higher than expected. Kind of bad jobs data out of the U.S. A couple reasons why it might cause crude oil price to drop. But we also understand the U.S. dollar is weakening right now. And if we go to the 1 hour candles now, we see this bounce. That bounce is off that one-day candle support. So for a scalp type move, if I want to try and trust the one-day candle support, and technical traders very well might, I understand why crude oil dropped, but I also understand the U.S. dollar is weak right now, looking at the Euro USD, the GBP USD. So if it was an overreaction on crude oil, then it should be able to easily bounce against a weak USD right now. That's the fundamental side of things. The technical side is this is showing a nice bounce off of a one-day candle support. Okay, so if I want to do a buy here, I could say take profit up here where it broke the support, so 66.71. So take profit, and we want to get crude oil showing buy. Still showing the Euro USD there. 66.70. Okay, doesn't have to break where it broke below. This was the support, and it broke it. So I'm going to take profit just before that. Doesn't have to break back above. Stop loss below 65.26, so 65.16. 10 cents below that. My potential profit isn't quite double the risk, but it's much better than the risk. Now I can go to a trade size that makes sense. That's about 1% of my balance, one lot. Could try and zero in a little better, 0.9. And I use 1% of my balance as kind of a conservative risk per trade, but you could risk less than that or more than that. It's up to you. Now I'm going after about double, almost double, 900, risking 48 or 486, less than 1% of my balance to try and make near 2%. Okay, so I go ahead and buy on that. Got my stop loss just below the one-day candle support, so we would have to break this support level on the one-day candles that hasn't been broken since last September. So nice support level technically, and I can take profit without having to break even above this broken support. Well below today's high, and even below this broken support, I'm looking to take profit. Just up to here gives me my take profit, okay? In the direction of the technical bounce off the one-day candle support. Again, if we want to see that one-day candle support, it's here, one-day candles, and we follow, let's get rid of some of these other lines so as not to confuse anyone. Okay, this is our take profit zone up here, just below that, and this is our support level here. We followed it across, and there's the one-day candle where it hit and bounced back in September, and today hit and bounced back up from that exact same spot. And we see that better on the 1 hour candles. Okay, it looks like still trying to bounce. So we'll see how that turns out. So we've got a couple trades that are running. One's a buy, one's a sell. Each one's just kind of getting going. We'll see how they turn out. There's a bit of volatility, so it makes sense. It might take a little while to go your way when you're taking a trade. Just have your stop loss far enough away to handle the little spikes, so you have a chance to have it turn your way. Okay, so what else can we look at? Sometimes you look for currency pairings that might be out of line. Like, I don't know, with the trade war stuff, we could look at USD Canadian. And so tit for tat back and forth with tariff threats and tariffs being thrown in place between the US and Canada. You can see here the US dollar pulled the Canadian dollar down. Okay, downward direction today on the 1 hour candles. But we also saw the US dollars weakening against the euro, against the pound, etc. So we can start to look and see, is this an opportunistic entry point to maybe go with the Canadian dollar against the US dollar? We see, and really not on the day, I shouldn't say, but over the last few hours, we see the US dollar going up against the Canadian. It's actually a greater downtrend. Okay, we see the high points getting lower and the low points getting lower. But what we see is a bounce up for the last 2 or 3 hours this way. And so what we're looking at then, if we want to draw a line across, this was a support level here, okay? This was upward trend, became support, support, hit and went up, hit, tested it once and went right back up here, tested again and went up, tested and up, and now we're below this price level. You see here, we're below this price. And we see it actually came all the way down here to this price level, okay? So we're looking at, if then I get rid of this downtrend channel, what we're looking at is resistance level here that's holding. After this downtrend, we have an upward movement, USD gaining back against the Canadian, but not able to break back above this resistance level now, which was the old support that we're below. So resistance here, support down here where it just spiked up from a few hours ago. So this could be an opportunistic spot if you feel like the USD will continue to weaken, that the Canadian dollar might pull the USD back down towards this direction down here. And if that was the case and you want to be in the sell direction, then what we're looking at is take profit down around 143.40. And stop loss would be above this resistance, so above 143.96. So let's say 144 even. Okay, so trying to make 6,600, risking 1,700. Well, that's a nice ratio, but maybe I don't want to risk 1,700. So if I go 2 lots instead of 20, now I'm risking a couple hundred, a little less than that, to make over 600. Okay, if I'm comfortable risking closer to 500s, and maybe I go 4.5 lots. And now I'm looking at 1,400 profit to risk 425. 4.7 lots. Over 1,500, risking 4.4. 4.9. Okay, risking 456 to make over 1,500. Okay, 5 lots puts me at 500 risk, less than 1% of my balance, to try and make more than triple that 1,600. That's on a sell. Take profit down here at today's low. And so then we're in on that trade. Okay, and what we're looking at then is this would have to break this resistance level that it broke below today in order for you to lose, and doesn't even have to break today's low for you to hit your take profit. So from a technical perspective, again, it's a great technical trade. We're just below a resistance level, this old support that we're below now. It's having trouble breaking above. We see it, tested it, and pushed down. And as it works its way down, we can take profit without having to break today's low. Okay? And so just some technical moves that maybe have opportunistic entry points from a technical perspective, and trading in the direction that maybe the greater trend is going for the day. So with the indices, we saw that the DAX was not in line with the other two indices. And so thought maybe it would trend in the same direction eventually. And then looking at the currencies, we see that the euro was gaining on the USD, the pound was gaining on the USD, but the Canadian dollar just bounced up, allowed the US dollar to bounce up against the Canadian dollar. So if the Canadian dollar follows the trend of the euro and the pound, it should pull the USD down. Okay, now the euro and pound were going up, but they're listed first in the pairing. So it still means they were gaining against the USD, and now if the Canadian pulls the USD down, it's also gaining against the USD. Okay, and it looks like it's at least started in that direction. And we've got 2 out of 3 trades already moving the right way. We only have one, the DAX, and it's being a bit stubborn, but we'll see if it gives way to the fear or not. But if we end up winning 2 out of 3, we're going to have a nice profit overall, right? Because I'm going after 2 to 3% profit on each trade and risking 1%. So if I lose 1 and win 2, that's a nice payout. I'm gaining 3 or 4% on my account. Okay, and a lot of times this is what you see. The momentum eventually carries the direction of the larger momentum of the global market. If you find a particular outlier that doesn't have a real strong reason to be an outlier, they tend to eventually follow that global pressure when it's some type of large fundamental news that might be driving it. Okay, not always, but many times that's what you find. And if 2 out of 3 is what we find in this case, follows that type of reasoning, then that would be a great turnout. And don't forget, up till now in this session, we've done our own technical analysis. You don't have to, by the way, or you have some help if you want to compare yours with Trading Central, for example. So if we want to see, well, what's happening with the gold signal before we look at the chart, we can see, okay, Trading Central says buy. They show us where the support level is, which they call the pivot line here. It's a buy signal. They're showing you where you might want to take profit because they found resistance on the chart further back in time at these prices. And so you can get the technical analysis outlined for you within the signal and the directionality as well. This already makes sense to me, fundamentally speaking, because we talked about the fact that USD was kind of weak today. And crude oil was the outlier dropping, but typically when the US dollar is weak and the euro is climbing against the US dollar and the pound is climbing against the US dollar, usually the commodities as well have an easier time climbing against the US dollar. Not always, depends on the overall fundamental news, but in general. So what we see here is the buy signal on gold is kind of in line with that thinking. Fear about inflation, gold is a safe haven. Weakening USD today, gold is a safe haven for weak currencies, etc. So now we see a signal that maybe we trust fundamentally, and we see the technical analysis. Now we can take a look at the chart and do our own technical analysis to see if we agree. I already have some resistance levels drawn up here from a prior session and some support levels down here. We're kind of dead smack in the middle of that zone. So not an opportunistic entry point from that perspective, from the old lines that I drew. But we can zoom in maybe on smaller candles, get rid of some of these old lines, and see if there's an opportunistic spot. that you think there could be an entry point here for gold. To me, it doesn't look opportunistic from a technical standpoint if you're wanting to buy, because it's gone up this direction and it actually has reached this resistance level up here. It's formed a new resistance level, resistance, 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 and you see it's pushing down. Okay, this is where it's pushing. Trading Central has to take profit up here at the next resistance level, up here. But the movement's having trouble breaking this resistance level. So this is where if you take the signal and you do your own technical analysis, you can decide whether you want to trust the signal or not. Yeah, I think the fundamentals are on the side, but the technical resistance level here, it hit perfectly on this resistance, and look at how it pushed down. The momentum's just not there, or else it would have broken this resistance. So the short-term momentum was weak, and it looks like it's trying to break back down towards the pivot line. So this signal right now, I'm not interested in, because it just confirmed to me weak momentum, for the time being anyways. If it breaks above this price here, then maybe I'd be considering to buy in this case. And so maybe a pending order above this resistance level at 29.31, let's say, or 29.32, a pending order that if it breaks above that price to buy with your take profit up further, maybe that makes more sense from a technical perspective. Waiting for a breakthrough to confirm the momentum, and that would mean it's breaking past this little spot in the signal, that it would go up and hit here, and then you'd be in for the take profit zone from a pending order, waiting for confirmation of a rise. Right now, we're pushing down from an existing resistance, which doesn't build confidence in that signal for me. And so this is the sort of thing you can do rather than blindly following signals. Take a look at the technicals within the signals and then do your own technical breakdown and see if there's confirmation of that uptrend or not. And right now, it's not confirmation of an uptrend on the smaller candles. It's actually confirming a downtrend. And if you start to look at 5-minute candles, let's say, you see it reversed rapidly off of this resistance level. Okay, we see the resistance from the past at the same price, and we see as soon as it hit there, it hesitated for a little while and then straight down. Okay, so it's not something that I would be looking necessarily to buy on this signal right now, because it's a strong downtrend falling off the first resistance that it hit. Okay, so sometimes we analyze signals and we know which signals not to follow as much as we might know which signals to follow if they look the other way, if they look good. If that had just broken through that resistance here, then it'd be the opposite. I'd say, yeah, it does look like an uptrend still, and maybe that signal's valid, let's go with it. But the checklist of checking the current trend, if it matches the signal and if it matches the fundamentals, we had 2 out of 3. The fundamentals say maybe buy on gold. The signal said buy, but our own technical analysis shows it wasn't able to break a small resistance level and really push straight back down. So this one I'll sit out rather than jumping in and putting a 4th trade here. Okay, so just an example of how sometimes you decide not to place a trade as well, even when looking at a signal that says buy. Okay, all right, everybody, thank you for joining. I think this is a good place to stop. Good luck with the trading today, the rest of the week. Probably there'll be some more added volatility as we head towards Friday with the non-farm payroll numbers coming in. It'll be a big day on Friday. If you're placing, any trades between now and then, I would make sure you're cognizant of your exposure amount, your risk level, like we did in the order window, measuring with the stop loss, for example. How much am I risking? Adjust your trade size accordingly, because the market's bringing a lot of opportunities with the volatility, but also the risk side is up as well. Okay, so just be careful with your exposures and trade sizes, and go after those profits, because there's a lot to be made. All right, everybody, thank you for joining. Bye for now.